All right, guys, welcome back. Time for a record. Happy holiday for the 4th there. If you guys took off, we are just getting back into the office here. First day back. And man, was that nice and well deserved. So let's get into that recap today. So we're going to go over a couple of key points on why we've seen this rollover here and what was coming. So one of our top picks here for top of our weekly Fibonacci and why we use these is obviously right here at teal line, 443.84. Okay. And last week we had this and another one a tad bit higher as the top of the market wasn't going to go much higher. But once we pick a top, we need to find a conformational rollover, right? You can't just pick a top and hope. We don't do that. We're conformational traders. So something that came into highs obviously has tested this level multiple times over the course of days and could not break through. Well, it is a 423.6 extension, which is massive. So very little chance for it to break through. Now, yesterday's trade day was one of the key points of interest here. You notice these high and higher lows were all holding except for yesterday's pre-market. We had a break in trend. Once the break in trend had happened in pre-market, we came down, created this lower low out of the sequence. Okay. So coming back down to data from Friday is what your targetable offense would be. And then obviously bottom of the gap, which we had left, that is the key signal for confirmation on trend. So we broke a lower low. What happens when we break a lower low? We short the bottom, right? And hope for the best. No, we wait for a confirmational back test. So it broke, retraced, give you another test, and lo and behold, give you a brand new indicator reset. So the oscillation reset. So if you look at the last couple of days of oscillation, we were kind of chopping the top channel, chopping the low top channel, and then it finally broke, gave you a big overcool, giving the RSI and MAC and everything else an availability to slingshot back up to create that last lower high, went hot on you, and then obviously end of day by the time we were doing these exhaustion pushes. And this exhaustion push is something to keep in mind where something dumps back down really fast, gets bought back up, or vice versa. So you see these hard dips, all higher lows, right? And then pushes out right into the lower high, but finally gives you a hot. So this is the one we're talking about where it comes down into the bottom channel, tries, gets this wipeout, wash, pow, pow, comes right back up and exhaust. This is a short trap. So the exhaustion is the quick lightning wash down, stop loss eater, right? So if you're long, it wanted to stop you out. And then the shorts pile in. They get in at the bottom because for whatever reason, they love to not wait for confirmation in short bottoms. They pop them out as the day traders, thinking that the day traders are, oh, we're going to get a new low end today. No, that's not what the indicators say. So the oscillation coming to the roll and coming to the confirmation, we had this low break, trap shorts, this retrace, trap longs at the top, and still not over the weekly Fibonacci level. So as we came into today with that lower low break in pre-market, let's take a peek at what we had. Now, in my chat, for my guys here, it was short all morning, and I said wait till 10:30 a.m. Central after the algos close on the euro to go long. So go long at 10:30, and that's what we had for the plan. So I can grab the Discord. You can see it here. Take care, friends. I'll pop it tomorrow. See how she plays out. 10:30 long watch. Nothing earlier. Obviously a broken record because that's what I said 1,000 times on stream today. No touching longs till 10:30. Now, had a couple different interesting points of support here, 437.40. We also had called the bottom of our anchors. This is an anchor system that we use as well. So we get onto here, this light, tiny blue level right here, and said once it touches there, we gave a 437 prediction for the bottom as well. It should be right around 10:30 when we hit that and do the reverse. So let's see, take a peek what happened. Here's 10:30, roll that back up. Here's the long, right at 10:30, and push back up. So I wanted to get up to high a day, and the 100 EMA is usually that back-tested watch, and that's the green level right here on the 5-minute chart. So we picked the bottom there, had a nice retrace to the 100, even gave you a little bit more. And now that 200 SMA is starting to catch back up, and we're going to have to see. Now, a couple interesting things happened here as well on the day for this rollover, and I want to do a little bit of investigation work here on the old VIX, because this was also a very good indicator of when the market bottom was coming, because we had so much over-under dedicated to this gold level of 16. And if we stayed under 16, the market could have had an earlier rally, but if we broke over that, it was going to FOMO out and go crazy. Now, the weird thing about this is the VIX was pushing up into very unique levels. And at one point, because of standard deviations calculations as it goes, right, you're not going to see that now, but we are up into the +4 on a 5-day standard deviation, and that's extremely rare. So when the algos show you that the algos are in control and the algos could care less about anything that you think and it wants to do to these force ups, The best rule of thumb is to wait till Euro close 10:30 a.m. Central. And that's what we did today and called hours beforehand. So I did catch some really good longs off that bottom 10:30 as predicted, and we'll go over that in a sec. But the VIX, on the other hand, here, over under 16. We popped into it, had a little sharp rejection, finally went up to the hot. Again, oscillation indicators, just big help here. Hot right here on the RSI pre, came back down a little bit, went hot again. No signal at all, no breakdowns, no nothing, until the lower high started to roll over. So here's that lower high, here's the high. So right in here, lo and behold, 10:30, so right when she started coming down, obviously, is when the standard deviation 4 and 3 were up here and a half. So this thing was really hot and extended. Now that was another really easy sign here to say, hey, the VIX is really extended. It's waiting for an algo swap, a market close, something else to turn back around at a technical level. And that's what I did at 10:30. So when I purchased into here, I had a couple different interesting levels here. And I was teaching a class as we kind of came into this level, which was fun. I had a couple different, we can go to the lesson one, a couple different reasons to take that. The anchor was one we just went over. We have that extension level that we teach in class. We have the golden pocket of our Fibonacci, which we had picked right here. So in between the 50 and 3820, this is the golden pocket as always on Fibonacci, right? So we came into the golden pocket support at 10:30, right as we called, and the anchor plus moving average magnets. So as soon as the moving averages finally gave up, I said one thing about the oscillation indicators as well, and I said wait till the MAC 5-minute does its reversal. Usually you don't see anything past like 0.4, 0.3 on the 5-minute chart. That's pretty far. We're actually way down into the 0.7 plus, which is pretty crazy. So I knew a bounce was going to come because there's no catalyst to hold this thing down. There was no crazy abrupt news, no world news, not a CPI day. It wasn't a Powell dump. There was nothing to hold this thing down. This is a very good technical sell from the gap down that it had, perfect 100 EMA sell, and the algos turned down right here, and she just stuck all the way, and then the algos usually turn off and swap at 10:30. And we're very familiar with that over the course of 5 years watching this thing on time frame swaps. So the MAC is the last indicator here, and this whole dump in the morning, I said these lines, our MAC moving averages, had zero interest in crossing. They were just perfectly spread and had no interest in pointing towards each other. And of course, coming into 10:30, we finally got that cross, so we had a whole bunch of upside potential. And this is one of the things I said in my chat as well. I said just wait for the lines to cross to the bull side on the 5-minute MAC, then go long, you're good to go. Not only that, the RSI gave you tons of higher lows, and TTM gave you a 15 to 25-minute entry on all light side oscillations. So we had 1, 2, and 3 all working together for oscillation indicator, timing the bottom, and that was it. So we also had a couple interesting daily dojis that my team will probably see here tomorrow that we go. And now to look at the daily oscillation, two things were kind of happening here at the end of the options day. We are now waiting for this to push back up, right? And two things, two scenarios. A lot of the times what we look for here, this double top area where the ending, my other level was 44453, you see on the screen there, which is the engulfing body of a very important weekly Fibonacci that we have. So selling calls here at 444. But that's for another video. As we came down for the double gap scenario right here, filled out one on the bottom side, but obviously not the top. So if we can kind of continue back down, if we're talking going down to 420s a little bit and before the next rip rally up, the oscillation indicators are giving us potential roll signal. We are coming at a double top, which is a great technical, coming off a hot to lower high RSI. There's the top RSI, and we were short here on a million different things. Wrote it down 6 days, waited for the pop back up, even have videos on that. Check the last few. TTM roll, MAC cross, small oscillation dead. So we have a lot of indicators working for us here. Smaller TTM wave, all oscillations working together is most importantly. So the two things you want to watch for. Now, at the end of the day, this was giving us a little cringe movement here where I was watching some call credit spreads at 440. Now, we have a very, very, very strong over-under right here. This 78.60 fib, that's 439.46. And when it mounts that, it has an opportunity to kind of squeeze back up to the next very strong range of the weekly. So if it gets over 440 and it holds this weekly, we can still easily pop back up. And we've seen that at prior high day. I was watching some call sells here, and I just put the spreads on watch so I can watch the spreads, and I watch the call credit spreads at 440. And even if you sold the tops here, even at the end of the day, you're actually losing money. So I know that the options were kind of scamming a bit there and these were for tomorrow's expiration, not today's, just one day out. I like to watch those 1 or 2 days out for force-ups on algorithms. Now, these little tops that you could have shorted, sold 440s, so on and so forth, they were just not doing good in the call spread. So something to watch for is this reset of the indicator. If we come back into the top channel here, the 50, the RSI, we shake off a sell wave. The MAC also holds in the top. This could, unfortunately, go a little bit higher. Now, if it wants to come back up and fill the gap or an attempt, the short's not going to happen until next week. Tomorrow's just going to be one of those fluffed up scam this day, and it does absolutely nothing for follow through. So you're going to want to sell some wide out iron condors, or in my opinion, call credit spreads by the tag of the gap up here where yesterday's lows was, where the gap started, and for then on out if we get a push. Now we'll go over that in chat tomorrow from my team, but those are only the oscillations key. So looking forward for tomorrow, over under is 439.46. If we happen to stay above this weekly level and push over that 200 SMA 5, we're going to come up and attack some of these halfway through the gap zones, because yesterday's lows and this giant gap down from the momentum that we've had from the lower low break here carried a pretty big low, and nothing is just going to go to a straight line. It doesn't work like that. So this lower low, you should have been watching futures overnight, huge crackdown, and of course the price action isn't just going to waterfall like that. We have no catalyst for that, so it has to bounce, provide us with that little scam, trap longs, and then potentially fall back down. And we're looking for that 420s or lower. Now, because that cycle on our other Fibonacci, I'll give you guys a price target if we do stay under that level. I'm going to say 440, and we're looking to come all the way back down to 428.17 if we stay under 443.84. That is the biggest precursor. So I'm going to be short biased on trend. So even if it goes up high, it doesn't even matter if it comes up to a trend line that is used by the last 3 topping days right here. It has to come all the way back up. It's still a short signal to stay under 443.84, which is here, coming all the way back down to that next 2618 weekly fib retracement, as it should walk itself down eventually and meet up here at that 428.17. Now, again, nothing goes in a straight line, so we're looking for that confirmation to do so. So if we get more manipulation in futures, because they love to manipulate futures overnight, 10 to 1 on SPY. So the futures contract, if that moves 10 points, SPY moves 1 point. 10 points on ES, 1 point on SPY. And when do they like to do that? They like to cause those gaps, right? So it'll move pre-market or after hours, because it's way easier to manipulate a futures contract than it is the entire S&P 500. So they will move it after hours here, right? And push that down, and we're going to get continuation short under this white channel right here. You see these 2 white levels? So it's going to be continuation short here, under. That's basically 10 SMA daily. And we have 2 different doji sets right here that are working together. And the weekly from our main big chart, which is the over under right here, 439.46. So if we stay under this, great. If we squeeze out a little bit and it tops Friday and kind of scams the longs, setting out a little trap, just watch for that. I'm going to lean to the short side still. It's obviously on a better short trend. All the oscillations on the daily are better short trend. So it is looking to short tops or sell some obnoxious calls later on into next week. So I would be call selling way out to the 443s, week out, perfectly fine. Get some residual income there. That's an easy one. And then looking at 440 and under the weekly, and then banking on easy targets like 435.50 down to 432.68. Then the extension targets are the ones we covered down near 428. So let's just watch this roll continuation, figure out what those anchors are. And if we don't get the continuation tomorrow, because we already had a really big dump pre-market, we're just going to get a choppy Friday. Then we're going to make a decision coming into next week's data. Of course, earnings, CPI, lots of stuff kicks off next week. And then we get out of that holiday weekend drag and everybody comes back for next week. Then we'll get some moves to follow through. Tune in for the next.